Hey, good afternoon, everyone. This is Trader Tim from EminiMind, and it's the 2nd of December, 2021, Thursday. Wanted to do a recap of some of my positions, including the short trade from earlier this week that I highlighted or told you about anyways, in Sunday's video, and lots of other good stuff to talk about. So let's just dive right in here. On the daily ES chart, you can see the very first halfway back short on the daily traded at its 50%, and then made it in a matter of 3 days down to the negative 23, and we are now bouncing off of the next halfway back long. So both of those levels I mentioned in Sunday's video that I put out, and did exactly what I said I was going to do as far as buying puts at the halfway back, writing it down to the negative 23% target, and then closed them out on yesterday at the halfway back long. So it's not every time that it works out that perfectly, but this was a pretty textbook week as far as the daily chart is concerned. So that was a really good short trade. And then what I did here, actually this morning, was add a little bit to my long-term position, VUG. And I actually did that so if you have a spouse or if you're employed and you have the ability to do a health savings account, you typically need a higher deductible savings plan. But if your deductible is $5,000, that's really not that much money to be, as far as to be self-insured and cover that yearly deductible, and really what you want to look at is your max out of pocket. So rather than paying huge monthly premiums, what I have set up is lower monthly premiums with a health savings account. In that health savings account, you can contribute something to the tune of $7,600 and change. Don't quote me, maybe $7,300, somewhere around there, somewhere around $7,000. As a family, you can contribute to that health savings account and use that money for health purposes, as far as like medical expenses, dental, orthodontists, all that kind of stuff. And the best part is you can invest that money. So in Thinkorswim or TD Ameritrade, I have my health savings account invested in that Vanguard VUG fund. And so, keep $10,000 in cash, and then the rest I just put into the health savings account. So, you go 4 or 5 years, and even if you have, a handful of doctor's visits, maybe you have a few $1,000s of medical expenses, but it's pretty quickly you can grow that account to, many, many years of your out-of-pocket or your deductible, your out-of-pocket expenses deductible. And so then you can just keep that big chunk of money invested, or small chunk of money invested, to then grow into a bigger chunk. If you're employed and you're planning quitting your job and trading full time or just doing something else, you keep that money. The health savings account comes with you, so you don't lose it. So it's especially if you're young and healthy, it's a no-brainer. If you're older, if you have some pre-existing conditions, or you do have a lot of trips to the doctor, it still might be worth it. Anytime you can self-insure and cut down on those premiums, in most cases, it makes sense. There's certain situations where, that one-off chance might only be a 5 or 10%, or even a 2 or 3% chance that something catastrophic might happen. And if that expense is going to be $500,000, well, then paying, a few $100 a month to insure against that loss would make sense. But definitely something to think about, because you can really gain a lot of traction as far as your growing your overall net worth when you aren't just pumping a whole bunch of money out each month into things that are debts, and not essentially creating wealth or growing your net worth, or putting that money into assets. So that's all I'll say about the HSA stuff. So the halfway back short, the halfway back long is now in play, and if we draw up the next halfway back short, you'll see we just closed today. We are right at it. Now, in the last year, it's only really been the first halfway back short that has gotten a big move. The times that we had a sell-off at the second halfway back, we really didn't go much further than doing a double bottom and then returning to new highs. We have, definitely some uncertainty with some of this new COVID variant, and I'm actually a little surprised there's not more hoopla about the debt ceiling stuff that's coming up here in the U.S. next week. But after that, we'll be going into kind of the Santa Claus rally typical time, the mid couple weeks in December. So it wouldn't be surprising me if that pattern plays out. Get the first halfway back down to the full halfway back long, and then maybe chop around under here a little bit, and then rip up from there. Wanted to touch on a couple things here with the crypto space. Bitcoin, I like Bitcoin if we can get under 50 again, especially like back to this halfway back. But I like under 50 because it's a big round number, but that would put us below the 61.8. So really what I'm watching for here is, if we can come down and kind of make a double bottom, then it would be worth, I think, adding a little bit there. Ethereum, I liked it when we came down to 4,000. Bought a little bit when we just dipped underneath the 4,000 mark, so worth playing there. And then take a look at the volatility, the VIX. I mean, a pretty big spike in the VIX to the 30s, mid-20s, where we're sitting today. And if you go to the intraday chart of the ES and you're looking at a 512 tick chart, I mean, there is a lot more activity when you're trading intraday these last handful of days. And when you just draw up some of these retracements, I mean, you're talking 59 up to a 66 for a micro. That's a much bigger drawing than we had in even, as early as last week. So it's important to zoom down on the 512 tick chart when volatility kicks up and make sure that you're not trying to draw a retracement like something like this, where you say, well, I drew it on the 512 tick chart, but then when you come in here and you really look at it, you're talking the anchor points are 10 points wide. That's actually pretty big, and what would normally, or in times past, be seen on just the traditional 5-minute chart, a larger drawing that you would connect 5-minute candles, and then you'd zoom to the 512 tick chart. So it's okay to draw up a retracement of the 512 when volatility is higher, and even take a smaller retracement off of the 512 versus just drawing the larger setup that might be 10 points wide and taking it on the 512 tick chart. So that's one thing to think about as we get into these little bit higher volatility times that a lot of people who've started trading in the last year or two really haven't experienced. So if you do have questions, feel free to drop them in the comments below. I will be doing a masterclass next Monday. If you want information on that, you can shoot me an email, tim@EminiMind.com. And I hope everyone has a great week, rest of your week, and I'll talk to you all soon.